Welcome back, everyone. The pound sterling is slumping against its major peers in early trade on Monday. UK retail sales rose at a slower than expected pace in April. The UK economy is highly dependent on consumer spending, and any weakness in the retail sector could be a sign of a broader economic slowdown. On Friday, the Office for National Statistics said retail sales rose 0.5% in April from the previous month, which is below the 0.9% increase that economists were expecting. On an annual basis, retail sales rose to 0.4%, which is also below the 2.7% increase that economists were forecasting. Commenting on the figures, ONS Director of Strategy and Economic Policy, Heather Bouville, said, "In the 3 months to April, total sales, including fuel, were 1% higher than the previous 3 months and 2% higher than a year ago. However, in the latest month, April, there were signs of softening in some areas." She added, "Food sales fell slightly between March and April, possibly in response to the exceptional growth over the past year as disruption from the pandemic continued to ease." Sales of non-food items were also flat in April after rising sharply in the previous 2 months. However, fuel sales continued their upward trend, increasing for the 4th month in a row. So the main takeaway here is that the UK economy may be starting to slow down. The retail sales data is not exactly what the Bank of England wants to see as it tries to bring down inflation. In other news, the UK has officially signed a free trade agreement deal with India, which was a part of the Labour Party's manifesto. The agreement is expected to boost trade between the two countries by £28 billion by 2030. The pound has not been able to find any support from this news. Now, looking ahead, the pound could get a boost this week if the UK inflation data, which is due on Wednesday, shows signs of slowing down. But for now, the market is still pricing in a 50 basis point rate hike from the Bank of England in June. The pound could face further selling pressure this week, as investors are looking ahead to key US data and the Fed's monetary policy decision next week. Last week, the U.S. jobs report showed that the American economy added 390,000 jobs in April, which is more than double what economists were expecting. This suggests that the Fed may need to raise interest rates by 50 basis points in June, which is more than what the market is currently pricing in. If the Fed signals that it is more hawkish than the Bank of England, this will likely cause the pound to slump even further. So, for the time being, the downside risks for the pound remain elevated. That's all for today. If you enjoyed this video, please hit the like button and subscribe for more updates. Thank you for watching, and see you in the next one.